20,000. Second year depreciation 18,000. Third year depreciation 16,200. It will go for 3 years. Depreciation account data to asset account, transfer entry, profit and loss account data to interest account to depreciation. This goes in favor of first year. Asset account data to high seller account, high seller account data to bank account, down payment, interest of that first year, interest account data to high seller account. Hello my dear student, I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Year College, a Temple of Excellence, MYSURU. In this session, I am going to hand Advanced Financial Accounting, second semester, Unit 2, Session 2 of BCom in favor of Accounting for Hire Purchase. In the last session, I have already told what is hire purchase system, how it will be. Hire purchase is nothing but credit purchase system. There are two parties. One is the hire seller, one is the hire purchaser. Goods passes on from hire seller to hire purchaser. He will pay the down payment. At the time of down payment, the goods passes from seller to the buyer. But the legal ownership lies with the hire seller till the last installment is paid. Each installment includes the interest. This is a major point. If the hire purchaser fails to pay any one of the installments, so the hire seller has got a power to take back the goods. This is one case. Another case, if the hire purchaser fails, he may return the goods to the hire seller, and whatever the money has been paid can be recovered from the hire seller. So this is agreement between whom? Hire seller and the hire purchaser. The legal ownership will be transferred only after the payment of last installment. Each installment includes the interest. Each installment includes the interest. That's a major point. We'll move on to problem now. On 1/1/2020, Mr. Dharma purchased a machinery from Mr. Rahul. Who purchased? Dharma is the purchaser. From whom? From Mr. Rahul. On hire purchase system, the cash price of the machine, rupees 2 lakh, with a down payment of 50,000 and 50,000 annually for 3 years, together with interest. This is the most important point. So 50,000 plus interest. So what's the cash price? The cash price is 2 lakh. How much they paid? 50,000. What's the balance? 1,50,000. That will be paid in 3 installments. 1,50,000. Every year they pay 50,000 plus interest, 50,000 plus interest, 50,000 plus interest. With the interest of 10% per annum, the machinery is depreciated 10% written down value method, means diminishing value method. Prepare necessary journal entry in the books of Mr. Dharma, in the books of the purchaser. So what are the entries I told you in the last session? When the goods have been purchased, asset account data to hire seller account data to bank account, then interest is payable to hire seller, interest account data to hire seller account, then pay the first installment, hire seller account data to bank account. For depreciation, depreciation account data to asset account, transfer entry, profit and loss account data to interest account to depreciation account. I will repeat. What is the first entry on 1/1? Asset account data to hire seller account data to bank account. These are 2 entries. Then on 31st December, start with interest account data to hire seller account. Then he pays the first installment, hire seller account data to bank account. For depreciation account data to asset account, transfer entry, profit and loss account data to interest account to depreciation. This goes in favor of first year. Second year, start from interest. What's the entry? Interest account data to hire seller account data to bank account, depreciation account data to asset account, profit and loss account data to interest account to depreciation account. These are verbal entries. We'll move on to problem now. So you have to prepare a table, calculation of principal and interest. The cost price of the machinery is 2 lakh. He paid the down payment of 50,000, which does not include the interest. Interest is nil. So there is no question of interest at all. It is a down payment of 50,000. So what's the balance now? 1,50,000. First installment he pays the 50,000. 10% of 1 lakh on this. 10%, 15,000. This is 10%. So 15,000, 50 plus 15,000, totally 65,000 in the first installment. What is the balance now? 1 lakh. On the 10% is 10,000. 50 plus 10, 60,000. What's the balance? 50,000 brought down. And 50,000 has been paid. 50,000. 10% of 50,000 is 5,000. Totally 55,000. Understand? You must careful about this word. 3 years together with interest. Includes the interest means whatever he pays includes the interest. Here interest is not included. Plus cost price plus principal money plus interest. Principal money plus interest. Principal money plus interest for 3 years. Once you pay the 3 years, no, automatically the goods transfer, leadership will be transferred from seller to the buyer. We move on to ledger now. Then depreciation on written down value method. Cost of the machine 2 lakh. Division at 10%, 20,000. Balance is 1,80,000. On the balance, so diminishing balance means what's the balance you got? $1,80,000. On this 10% is 18,000 for second year. Once again, the balance is 1,62,000. 10% is 16,200. This is your balance at the end of the third year. So first year division 20,000, second year division 18,000, third year division 16,200. It will go for 3 years. Now we'll move on to the journal entry. First entry, the cost of the machine is 2 lakh. Machine on 1/1 beginning of the year. Journal entry in the books of Dharma purchaser. Machinery is coming in, debit what comes in, credit what goes out. We have to pay the money to whom? Rahul, which is a personal account. Debit the receiver, credit the giver. What's the entry? Machinery account debtor to Rahul account. We have to pay the 2 lakh. Then we have to pay the down payment of 50,000 here. Rahul account debtor to bank account. This is your down payment. Then interest of that year, we are calculating 15,000. Interest account debtor to Rahul account. You have to pay the interest to high seller. Then in the first year, Rahul account debtor 65,000. To bank account 65,000. 50 plus 15. Then division of that year, depreciation account debtor 20,000. To machinery account 20,000. So both will be transferred to profit and loss account. Profit and loss account debtor to interest account, to depreciation. It's a transfer entry for first year. Same thing goes to the second year. Start from interest. Interest account debtor to Rahul and Company 10,000. We pay the second installment. That is the installment for second year. Rahul and Company to bank account 60,000. Then here 50 plus 10, 60,000. Depreciation account debtor to machinery account 18,000. So this goes in favor of second year. Come back to third year. Transfer entry. Profit and loss account debtor to interest account 10,000. To division account 18,000. Totally 28,000. Come back to third year. Interest account debtor 5,000. To Rahul Company 5,000. He pay the third installment. Rahul Company account debtor 55,000. To bank account 55,000. He pays the third installment. Then depreciation of that year. Depreciation account debtor 16,200. To machinery account 16,200. Transfer entry. Profit and loss account debtor to interest account to depreciation account. Very, very simple entries. So 15 marks question. I can go with the revision first one. We purchased the machinery. What's the entry? Machinery account debtor to Rahul and Company. We purchased the machinery. How much payable to Rahul and Company? 2 lakh. How much down payment is made? 50,000. Rahul Company account debtor to bank account. This is the down payment. Interest of that year. Interest account debtor to Rahul Company account. So Rahul Company becomes the creditor because he is the seller. We have to pay how much? 15,000. Then we pay the first installment. Debit the receiver. Rahul Company account debtor 65,000. To bank account including the interest 65,000. Division of that year. depreciation account data to machinery account 20,000, transfer entry to profit and loss account, profit and loss account data to interest account to depreciation account. This goes in favor of first year. We move on to second year. Start from interest. Interest account data Rahul and company account. Pay the second installment. Rahul and company account data to bank account. Depreciation of that year. Depreciation account data to machinery account. Then transfer entry. Profit and loss account data to interest account to depreciation account. So this goes in favor of second year. Go to third year. Start with interest. Interest account data to Rahul and Company. What's the entry? Interest account data to hire seller. Who is the hire seller? Rahul and Company. Interest account data to Rahul and Company 5,000. Pay that installment. Rahul and Company account data to bank account 55,000. Then charge the depreciation. Depreciation account data to machinery account 16,200. Profit and loss account data to interest account to depreciation account 16 plus 5 21,200. See, very simple, no complication at all. Then once you know that what are the common entries are asset account data to high seller account data to bank account, down payment, interest of that first year, interest account data to high seller account, first installment, high seller account data to bank account, then depreciation account data to machinery account, transfer entry, profit and loss account data to interest account to depreciation account. This goes in favor of first year. Second year, start with interest account data to high seller account, pay the second installment, hire seller account data to bank account, charge the depreciation account data to asset account, transfer entry, profit and loss account data to interest account to depreciation account. Very easy entry. Fill up the blank. So they will give the problem for 15 marks. Fill up the blank. Then yesterday in the last session, we saw the ledger. Now we saw the journal entry. In the next session, we'll go with another problem. Hope you understand. First point, calculation is most, whether it includes the interest or exclude the interest. That's a major point. Together with means you have to plus the interest. Inclusion of interest means each installment includes the interest. So that we have to read through 3 times. So they may ask the ledger in the books of hire purchaser. So we have to prepare one hire seller account, then one asset account, one the interest account, one depreciation account. So slowly, if you are perfect with the journal entry, easy, very easy problem for hire purchase. So they will ask in examination, what is hire purchase? What are the features of hire purchase? So in the next we have got installment, difference between hire purchase and the sale, hire purchase and install. If you learn, you are solidly prepared for the exam. Hope you understand. We'll meet in the next session with another problem. Till then, goodbye. Meet in the next session.